had guests after guests tell me it's time for a re-rating in China. You're saying hold tight. What will you be looking for to determine the next entry point for you guys?
Yeah, we've been very cautious about the broad China equity market for most of this year. We downgraded China to equal weight back in January, and we're still holding that stance going into 2022. We're seeing very significant earnings deterioration for third quarter of this year and looking into next year. And the market is not fully pricing that in. And valuation-wise, it's not particularly cheap. MSCI China is still trading at 13 times forward PE. That's just about 5-year average. It's not the sort of the actual trough we're looking for.
So the preference, relative preference, let's put it that way, is across the border on the mainland in the A-share market.
Absolutely. We've been overweighting A-shares for this year, and that's played out so well for us. I think going into next year, we expect that outperformance to continue for a slightly different set of reasons. For this year, it's mainly because A-share doesn't have that internet exposure. But going into next year, we think A-shares are much better aligned with the regulatory tailwinds. They have the exposure to the manufacturing upgrades, to the semi-localization, to green economy, and all these thematic opportunities, much better positioned.
But everything has a price, and you hear from the likes of Goldman saying, look, we're at these attractive levels right now, and if they do see some type of PE expansion, that could be enough to drive gains in the equity market, despite what you're talking about, which is EPS growth, which remains subdued. What's your take on that?
Right. Again, so the current market valuation for MSCI China is not absolutely cheap. It has become cheaper, coming from 18 times PE at the beginning of this year down to around 13 times. That's a quite big correction. But again, it's just about 5-year average. Back at the beginning of last year, we were looking at below 10 times PE. That was a very low level. We're not saying we have to get there before we turn bullish, but a more reasonable valuation level with more realistic earnings expectation would be a better entry point.
Well, I mean, what if you then remove the tech components to the MSCI China? So that takes you into the enterprises index, and to a lesser extent HSI, which I think was below book a couple of days ago, for example. Does the enterprises index look better in your view?
Not necessarily, because the enterprise index still has a certain portion of the exposure to the tech sector. And then we're also looking at a lot of macro headwinds. GDP has been disappointing for 2 quarters in a row, and third quarter doesn't look that nice. So I think the macro headwinds is something that we also need to take into consideration.
Cool.
What do you make of the scoop that we have on China? The CSRC, although they have denied it, is saying that they might ban these VIE structures for anyone listing offshore. Does that impact Hong Kong in any way, you think?
Yeah, I think that's apparently a market moving factor. And we've been following this development for quite some time since the first discussion started to appear around the Holding Foreign Companies Accountable Act. And actually, going into next year, we actually highlighted the potential delisting risk for ADRs as a risk factor from external that we need to watch out for. Because SEC, the US SEC, has pointed out that they may be able to finalize all the details for this implementation of the act before the end of this year. So with or without this CSRC move, which they already denied, I think the pressure point can also come from the US side. So we should watch out for that.
The targets for next year, I mean, you've already laid out the foundation for that. So it's 95 on MSCI China, 25,000 on Hang Seng, 9,000 on HSCI, CSI 300, 5250. How did you guys come up with those numbers?
Well, so mathematically, it comes down to the valuation level. We think that will be reasonable and realistic for next year. And then the earnings expectation. For MSCI China, we are expecting 13% earnings growth for next year, compared to 17% from the consensus. We think the consensus needs to come down further.